Okay, everybody, take a moment, look at the disclaimer. This content is for educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA analyze the market, how we look at the markets, but nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we are going to make money in the middle. Okay, what we're going to do now is this is going to be part one, okay, of analyzing the major market indexes, ETFs, the ETFs that track the major market indexes. This is part one, and we're going to start out with the DIA, okay? And we're going to start with the DIA on the, okay, chart of our moving averages. Just our moving average charts, okay? Our chart with our moving averages on it. So let's expand this a little bit. Let me zoom in so you can see it a little better. Okay. Let's expand, let's move it over a little bit. So now we have a daily chart of the DIA. This is the ETF that tracks the Dow Jones. Okay. Now, if you notice here, we have this downward trending 50-day moving average. Okay, we talked about this when we looked at the actual index itself, the Dow Jones, the actual index. If you go back and look at part one of Walking with the Market, we talked about the actual Dow Jones in the 50-day moving average. Well, this is the DIA, and we got this downward trending 50-day moving average, okay? And prices has been moving sideways here pretty much for the last week, all right? But we got overhead resistance. We're going to make this very simple, okay, and easy to remember. Look out for the overhead resistance. It's at 335.09. The market closed, the Dow Jones closed at right around 329, okay? So we have to watch out for this overhead 50-day downward trending moving average. That's overhead resistance. That can be a problem, okay? Now, the good thing is that we found support Wednesday and Thursday. If you notice these 2 days, we found support right at the 21-day moving average, okay? We found support right at this 21-day. This yellow line is a 21-day moving average. We found support there, okay? And we finding support at this uptrending green line, which is the 9-day moving average. So right now we trapped between the downward trending 50-day moving average and the upward trending 9 and 21-day moving average on the DIA. So that's what we need to look out for going into next week, all right? Well, how are we going to trade? We squeeze between these two moving averages. Very strong key overhead resistance and strong short to intermediate term, shorter term, 21-day moving average as support. That's pretty much what we're looking at. Now, we had an inside day for the DIA. Okay, we talked about the inside day on the index itself. Well, here's the inside day on the DIA. If you notice the high and the low for Thursday, well, we inside of the high and the low on Friday. That's an inside day. The highs and the low on Friday was inside of the highs and the lows on Thursday. All right, so we had the inside day, and it was a bearish inside day. If you notice, prices closed at the lower end of the range. Okay, prices closed at the lower end of the range on Friday, and it was distribution. Okay, on the DIA, lower prices with higher volume than the previous day. So that's not good. We at overhead resistance. We sitting on support. It was a bearish inside day, and we got the distribution on the Dow Jones. Okay, so now let's look at the Dow Jones. All right, on our Let's look at the Dow Jones on our structural chart to see with the trend lines, horizontal support and resistance levels, and our trend lines. Okay, so here's the Dow Jones, not the Dow Jones, I'm sorry, the DIA, the ETF that tracks the Dow Jones. Okay, the DIA, the ETF that tracks the Dow Jones. So let's look at the DIA. Okay, if you notice here, we had that downward channel. We broke out of that the week before last. All right, so let's just see where we at now. Okay, well, as you can see, all right, we are at key overhead resistance. Here's our red line, which is a long-term weekly resistance level. This red line is a long-term weekly resistance level. These two green horizontal lines are a daily resistance level. Okay, those are daily resistance levels. So we got daily resistance at 332.33 and 333.06 right here. And you see we came right up to this daily resistance. We kind of got above the weekly longer term resistance levels at 331.35. Okay, we traded above them, but for most of the week we closed below it. Okay, so 3 out of the 5 days, all right, we closed below this weekly level. We did trade above it during the week, okay, some days during the week, but we stalled right at these daily horizontal resistance levels at 332 and 333. Okay, as you can see, we haven't been able to get above that. So if these prices next week was the reverse, we need to see it get above the weekly horizontal resistance and above these daily resistance levels and get back above 332 and 333. In other words, we definitely got to get above the high of Wednesday and Thursday. Okay, we definitely got to get above those highs. And if we start trading above those highs, then we're going to be getting back above the weekly close of our signal week. All right, we didn't on our Bollinger Band strategy. Okay, we was on the pivot week. We did not take the trade. Okay, because of key overhead resistance. We talked about that all last week. All right, and we traded back below. Good, we didn't. Good, we was patient. We watched the volume and things of that nature. So good, we was patient, and we traded back below the close of the signal week. That was pretty much the high of Wednesday and Thursday. Wednesday and Thursday. Okay, so we traded back below that. So if prices, when we open up on Monday and start trading next week, if prices start rallying, we got to get above the weekly level at 331 for the DIA. And then we got to get above the two daily resistance levels, 332 and 333. And we got to break above basically the close of the signal week, which is basically going to be these highs on Wednesday and Thursday. So 333.06, to make it simple, is what you should be looking at right here. And that'll bring us out of this channel and back up through overhead resistance, right? So now let's look at some momentum indicators real quick, just to see what's going on our momentum indicators, right? So down here below we have the MACD, and we have stochastic and the KST. Okay, let's expand this so you can see it, and we'll go through each one by one. Okay, so here's the MACD, right? The MACD is right here. This is our MACD right here. All right, here's the MACD. And we did get a bullish crossover. The histogram got into the positive, turned green. But the MACD line is still well below zero. Okay, it's still well below zero. So momentum is coming in. We got a bullish crossover on the MACD, and the MACD is starting to expand away from its signal line. And we can see that on the histogram up top. Okay, but let's see, we're starting to get closer to the zero line. Let's see if the MACD could get above zero, right? But once again, look at that red line on the chart. This is the bar chart of prices up top. We right at overhead resistance at the 50-day moving average. Don't forget that. Now, the stochastic, okay, is starting to cross over now. We're starting to get a bearish crossover where the stochastic line is crossing below its signal line. We're starting to get a bearish crossover on the stochastic, and it still look like it's trying to cycle back down. So that could be a little bearish, show us a little downward momentum, and we start getting back below 20. Back below 80. Okay, on the stochastic, the stochastic line start getting back below 80 and start trending down. So we could see a little movement to the downside. The stochastic is starting to tell us that prices are starting to move back and close lower in this trading range. Okay, so that may put a little pressure on show us that it's a little pressure on the upside movement, a little more pressure movement to the downside, and prices might start coming back down. The stochastic is giving us a bearish crossover and is recycling down. So short term, the stochastic is telling us maybe prices are going to move down just a little bit, but it's still well above 80. So that's telling us prices are closing higher and higher within this range over the last 14 days. It's still well above 80. That's a lot of that's still showing us that it's a lot of momentum as far as prices closing, where prices are closing within this range. It's closing further and further to the higher end of the range over the last 14 days. We're well above 80, so that's still positive, but it's cycling down. We did get a bearish crossover on it, and so if it gets back below 80, you're probably going to see prices pulling back down. Okay, now let's look at the RSI in the Chaikin money flow. Okay, so let me expand this so you can see it. Here we got the right here. This is the RSI. Right here is the RSI, and this is our Chaikin money flow down here. So we did get above 50. All right, the RSI got above this horizontal yellow line, which is 50, but this green line up here is 60. So we haven't been able to get above 60 on the RSI, and now it's coming back to test the 50 level. If we start breaking back below 50, coming down here to this red dotted line, which is 40, that's telling us that the momentum is more to the bearish side. The momentum is more in bearish control. We lose an upside momentum when we start breaking back below 50. If we could hold 50 on the RSI, and start heading back up toward the 60 level and break above 60, then the bulls may be taking control of the momentum. But right now, it's pretty much sideways. It's right at 51. Okay, it's pulling back down, but it hasn't broken below. Okay, if you notice, if I expand this area right here, if you notice, when we was having that real push to the downside and we hit those lower lows, okay, if you notice, the RSI never really got above the 50 level, this yellow line. We traded right up to the yellow line, rejection. Traded right up to the yellow line, rejection. Trade right up to the yellow line, rejection. We finally got above the yellow line, which is the 50 level, and we held support, okay? And now we're right back at it. So if prices continue to move down and this RSI break back below 50, okay, if it break back below 50, that's showing that the momentum might be starting to move to the downside. So for the DIA, okay, the momentum is still to the positive side, but it's starting to weaken just a little bit. You see that on the stochastic also. The stochastic we just looked at is cycling down, okay? And we're getting that bearish crossover. And now look at the Chaikin money flow. It is in the green, right? The Chaikin money flow is in the green, okay? But okay, it's not expanding at the rate that we were wanting. It's starting to stall out and maybe come back down toward the zero level. So here we can see where the Chaikin money flow, okay, showing us that money is coming into the DIA. All right, turn positive. We got the green bars on the histogram of the Chaikin money flow down here. But as you can see, it's starting to stall. And on Friday, we got pretty low here on Friday, right? It came back down to the 6 level. So let's see if we can stay above zero. Hopefully it doesn't turn back red. But if this keep decreasing and then turn back red and the RSI breaks back below 50, well, I would think that prices are probably going to start back moving to the downside. All right, so let's look at the volume and see what the on balance volume is telling us in regards to the DIA. Okay, so here's the DIA. All right, and this is our chart of the on balance volume. All right, the DIA is still holding relatively strong on the volume. You know, if we're looking at our lines, our up top we have our line of closing prices. This green line is our line of closing prices up top. This yellow line is the on balance volume. Okay, so what we need to do is let me bring this line. It got off a little bit. The adjustment got off a little bit. Let me bring that down to the prior high. All right, and then bring down this line on the accumulation distribution and the price volume trend. Let me bring that down to the prior high. Okay, now let's expand this a little bit so we can see it. Okay, and then let's zoom in. All right, so as you can see, here was the prior high for the DIA right here. Right, let's put a horizontal line across the prior high right here. Boom. Okay, so as you can see, price has not broken back below its prior high yet. All right, here's the prior high for the DIA right here, right? This is the prior high for the DIA. The on balance volume for the DIA. The prior high on the on balance volume for the DIA. So if we move this volume line, to move this vertical line, horizontal line up to the high, the prior high on the on balance volume, well, we're seeing something we don't want to see. Okay, the on balance volume is breaking back below its prior high. Here's its prior high. Here's the horizontal line going across the prior high, and as you can see right here, the on balance volume line is just breaking back below its prior high. We don't want to see that. It's leading price to the downside. The on balance volume is leading price back below its prior high to the downside. We don't want to see that. That's telling us that volume may be starting to come out of the DIA, right? Volume may come, it's holding up, it's still holding up, but it's breaking down. And we don't want to see that, okay? So that's the DIA for the on balance volume for the DIA. So for the most part, for the DIA, I would say we need to be very careful. Momentum is starting to slow just slightly for the DIA. Momentum is starting to slow just slightly, right? It is starting to slow down on the momentum. On the moving averages, we are up against the 50. We squeeze between the 50-day as resistance and the 21 and the 9 as support. We have that inside day. Okay, so we need to be very careful and be patient and see how the market plays out comes next week. All right. If we look at if we look at the DMI, okay, if we look at the DMI, the ADX, right, the ADX indicator, all right, if we look at the ADX indicator, directional movement indicator, right, the ADX, all right, we notice that the red line and the green and the yellow is all pointing down. That's not good, okay, that's not good. So the ADX is telling us that the momentum is to the downside. So we trended sideways on price, consolidating sideways, while the red line is moving down. So the bears are not totally in control. The green line is also moving down. It tells you the bull's not in control. But the yellow line is also moving down and it's below 20. That's telling you that we have no trend. Okay? So the ADX is telling you that there is no trend. Okay? The bears are not fully in control, but neither are the bulls. Okay? And they both are going down. So what we want to see is the red line going down and the green line starting to go up, and the yellow line telling us that the trend is going up. As long as the green line going down, well then the bulls are not in control. So the ADX is telling us that we need to be careful. There's no direction there. Go back and look at part 1 and part 2 of walking with the market. We said the direction. There is no real direction in the market right now, okay? We are at this area indecision. The ADX just told you that, all right? And the volume may be coming out. Now, let's look at the SPY. Let's look at the SPY real quick and see what the SPY is telling us. See what the SPY is telling us, right? So here we got the SPY, the ETF that tracks the Standard & Poor's 500, right? Let's run through this very quickly. Okay, very quickly we're gonna run through this, and let's zoom in so we can see it. Okay, well, we read that support on the 9 and the 21-day moving average, right? Here's our 9-day moving average, the green line. Here's our yellow line with the 21-day moving average. We read that support. Are we gonna hold support? Well, we held support Wednesday and Thursday last week, and we had that strong bounce on Thursday on low volume. Okay. So now we got an inside day on Friday. All right. We got that inside day. Okay. So it's an inside day, a day of indecision on Friday. It was a bearish inside day because prices closed at the low end of the range. It closed down here at the low end of the range on this bar. So it's a bearish inside day on Friday. Okay. And we got a downward trend in 50-day moving average that's right overhead. Okay. All right. So right now, are we going to hold support on the 21-day and the 9-day moving average? Okay. And for the first time in the last 5 days, we actually closed below the white line, which is the 5-day moving average. We actually closed below it for the first time. For the last 5 or 6 days, we have been closing above the 5-day moving average. Okay. So what we always say, if you're closing above the 5-day moving average, you closing above it, trading above it, and closing above it, well, you can shut your computer down, take a walk in the park because you're making money. All right. But for the first time Friday on that inside day, we closed below the 5-day moving average. But we're holding support at the 9 and the 21. We got that downward trend in 50-day moving average up top for the Standard & Poor's 500. So can we hold support is the question. Can we hold support? Let's look at the structural chart for the S&P, the SPY, the ETF that tracks the Standard & Poor's 500. Let's look at the structural chart and see what it's telling us, right? Very quickly. The structural chart here is telling us that we're at resistance, prior support, which is now resistance, which was acting as resistance, and now it's back to prior support. It's back to support. Basically, okay, we at support levels on the structural chart, right? So here, okay, for simplicity, I'm sorry. Okay, sometimes I get too technical. Here is the support level at 410.50. We are right at support. We closed at 410.54. The support level is 410.50. We just closed just above it by 4 cents. All right, we're moving sideways. Here's the high for Thursday. We got an inside day. All right, can we stay above this 410.50, this support level right here on the daily chart, and get back above 414.70, which is a resistance on the daily chart? Can we get above that? If we can do that, then maybe, just maybe, we can move back up and start trying to get near 420, which is the next area of interest to the upside. So we right on support for the Standard & Poor's 500. We right at 410.50. That's our support level. Can we stay above that? Okay. So we saw support on the 9 and the 21 day, but can we stay above this horizontal support level on our structural chart, which is at 410.50? All right. So let's now look at the stochastic and the MACD. Okay. Well, the MACD is still positive. The histogram is green. The MACD is positive. Histogram is green. Okay. But the stochastic is doing the same thing. It's giving, as we saw on the DIA, it's recycling down and it's crossing over below its signal line. All right. So the MACD is still showing okay momentum. The MACD line has not gotten above the 0 line yet, but the histogram is in the green. That's good. But the stochastic line, the yellow line, crossed below the crayon. That's a bearish crossover and is recycling down and is coming down toward the 80 level. Well, if that recycle, if that bearish crossover and is pulling back down, if we get back below 80, we're probably going to see prices coming down a little bit, okay? And we might start breaking back below support. So that's what we're watching. Are we going to come back below 80, start coming back down within the 80 and the 20 area. Hopefully we stay above 50, okay, on the stochastic. But if the stochastic start recycling down, we got the bearish crossover already, yellow cross below the crayon line. All right, it's still above 80, so it's saying that we still got a lot of momentum to the upside. Prices are still closing higher and higher within this range. That's great, but it is giving us a bearish crossover, and it's starting to come down. All right, and we got that inside day, a day of indecision. So we got to watch that, because if it keeps coming down, then if the stochastic keeps coming down, we're probably going to see prices pulling back. All right, so we got to keep an eye on that. As far as the RSI, which is the closest thing to pure momentum that we have, besides the rate of change, what we're going to look at probably in part 3 of this. The RSI is starting to come back down to the 50 level. We don't want to see it break below 50, okay? If it breaks below 50, if it breaks below 50, if it breaks below 50, that's a problem, all right? So I'm going to expand this up a little bit so you can see it, all right? If it breaks below 50, that's a little issue, right? So here's the RSI right here. Okay, here's the RSI. Here's our 50 level. We came back, we found support. It tried to move up with prices is moving sideways. The RSI tried to move up, but now it's coming back down to test 50. If we break back below 50, come down below 40, come down, start testing 40, get back below 40, well, prices are probably going to start moving downward, okay? We don't want to see that, all right? We don't want to see prices moving back down, but the RSI getting below 50, that's going to tell us prices might start moving down. Momentum is getting more to the bearish side, okay? And here's the shaking money flow down here below. We see it did turn green rather on the histograms, but it's starting to come down a little bit now. It's starting to trend down. We don't want to see it start to turn back into the red. That tells us that money is starting to come out. Well, it's trending down. So the momentum of the shaking money flow, the money coming in, is starting to decrease. But when it starts turning red, that's telling us money might be coming out. So the RSI is coming down. The shaking money flow is starting to reduce. Momentum is starting to get a little lighter for the S&P as the SPY. Just like we saw on the DIA, okay, it's still to the positive side for right now, but the momentum is starting to slow. So let's look at the on-balance volume. Okay, let's look at the on-balance volume. Let's adjust the line here so we can see it. All right, let's bring down the accumulation distribution line. Well, what's more important right now is the on-balance volume. Okay, we're not going to trade against the on-balance volume. All right, I'm just going to unlock this and I'm going to bring this line down so you can see it on the accumulation distribution. But we're not going to trade against the on-balance volume. All right. So now let's zoom in on this a little bit so we can see it. All right. So here is the high. Okay. This is our line chart of closing prices. This green line is our line of closing prices. Here's the prior high on the SPY. We're coming back to test it. Okay. The problem is that on the on-balance volume, which is right here, our running total of volume, if you look at it, here's the prior high on the on-balance volume right here. We already broke below its prior high. So is the volume showing us that the selling pressure is more to the downside? The volume is coming out. The on-balance volume is broken below its prior high. It's broken below it. Here's the horizontal line where we needed to act as support. Well, we broke below it. Are we leading price out? Okay. Well, we have broken below it once before. Price never got back below its high and it tried to move up. Well, we're moving sideways now. Okay, so we've broken below it for the second time. The more you keep testing it, the likelihood that it's going to just totally fall apart. Okay, so the more you keep testing the area, the likelihood is it's going to collapse. It's like punching a wall, hitting a wall with a hammer. The more you keep hitting that wall with a hammer, the more likelihood sooner or later you're going to break through it. So we got to watch it. So the volume seems to be coming out. Okay, so that's the DIA and the SPY. Okay, we see the volume, okay, might be coming out. We see the momentum might be slowing. We see the downward trending 50-day moving average, and we read that support on the 21-day and the 9-day moving average, okay? So we got to be careful. Volume coming out. We had support on our structural chart. We had support on the 21-day and the 9-day. Hopefully it can hold. Momentum is starting to slow, okay, on the DIA and the SPY, okay? And the volume is showing us that the on-balance volume line is showing us that the volume may be coming out. And we do see on our volume bars, okay, we're not seeing a lot of accumulation. We saw more distribution since the follow-through day than accumulation, okay? So now let's just look at lowest real quick. Let's look at lowest real quick for the DIA and the SPY, okay, for part one, for the DIA and the SPY. Let's look at lowest real fast, all right? And let's look at the DIA first. Here's the DIA. We're going to look at the DIA for lowest first, okay? And then we're going to look at the SPY. So here's the DIA for lowest, all right? Let's zoom in. Let's zoom in so we can see it, all right? So lowest is still holding support. That's wonderful. So lowest is still holding support, okay? Right there, right below price. You see that blue line is lowest's line. It's right below price, okay? So we can see that. So as long as lowest continue to hold support, I'm going to lean more to the upside. But she right at it. Lowest is at 304. Price is closed at 306. It doesn't have much. We see this horizontal support levels here. We looked at that on our structural chart. We right at support. I'm sorry, this is the Qs. I apologize. We're going to do the Qs on part two. I made a mistake. Let's hit the DIA. I'm sorry about that. Well, you got a preview of what lowest is going to look like in part two for the Qs, right? So let's go to the DIA. All right. Here's the DIA. I apologize. Here's the lowest chart for the DIA. Okay. All right. Let's zoom in. Now I know I'm on the DIA now, the ETF that tracks the Dow Jones, right? So here's lowest. Here we go. Sorry about that, y'all. Here's lowest blue line right here. Well, it's pretty much the same thing. We're a little bit further away than what the Qs look like just now, but lowest is still below price, holding support. Price closed at 329, lowest is at 326, just below price. So as long as price stays above lowest on the DIA, I'm leaning more to the upside that hopefully it can hold. I'm not going to be shorting anything that's above lowest, that's for sure, okay? Now, let's minimize this. Let's go back, zoom back out, and let's look at the SPY and see what lowest looks like on the SPY, okay? Okay, let's zoom in. Okay, so the SPY lowest is still holding support for the SPY, still holding it up, all right? As you can see, the blue line for lowest is right above the price on the SPY. The SPY is at 410, lowest is at 408, just $2 below it. So lowest is still holding up support for the SPY and the DIA, but we see volume is coming out. We see momentum is starting to slow a little bit, okay? And we saw the ADX for the DIA was telling us that it was no trend, okay? The bulls nor the bears are really in control, and it was no trend. Let's look at that ADX. Let's finish off with the ADX for the SPY. We didn't look at that on the SPY. So let's look at the ADX for the SPY real fast. So here's the ADX on the SPY, right? Let's zoom in so we can see it. As you can notice here, look at this. You got the red line is the red line, which is representing the bears, is down. The green line representing the bulls is down. And the yellow line representing the trend is down. Everything is down. So nobody is really in control right now. What we want to see is this green line starting to turn up and crossing above the red. That's telling us the bulls are in control. And then we need the yellow line to start turning up. That's telling us that the trend is there. And especially when the yellow line gets above 20, gets above 25 and start moving up, the trend is there. So you see when the red line was above the green and the yellow line is above 20, well, it said the bulls, the red line is above the green, the bears are in control. The yellow line is the directional line, is above 20, where the bears are in control and the trend is down. So that's how it works, point blank and period. Right now, we have no trend because the yellow line is down, and neither the bulls nor the bears are in control. where the bears are more in control because it's still above the green line. But they're losing some of their momentum because prices are consolidating sideways and it's coming down. Okay, so sideways momentum on price. The control of the bears is kind of giving up. They're giving up a little bit of their control. The bulls are not really gaining control. The trend is down. No real trend. Okay, prices are consolidating sideways. Momentum starting to come out. We still holding support on lowest. So that's where we at. So in other words, we got to be patient and wait and see what happens next week to give us a better idea, higher probability of what may happen. Let's walk with the market, right? That's it. We have to. All right. So this is part one of our daily analysis of the ETFs. We did the SPY and the Qs. SPY, we did the DI and the SPY. We're going to pick it up with part two, okay, which is going to be the Qs and the IWM, and we're going to run through the ITOT real fast, okay? So look out for part two of the daily analysis of the major market ETFs, okay? Okay, take care. See you in part two.